I'm probably going to upset a few people with this video, because once you see what is actually happening with the UK property market behind the scenes, you cannot unsee it. You know, you got everybody thinking that house prices are where they're at because of interest rates. Landlords are greedy, or because the government aren't building enough homes. So that's part of the story, but the bigger story is the big money is moving into the UK housing market. And once you understand who is moving into the UK housing market, then you'll realize that actually getting on the housing ladder before 2030 is becoming harder and harder. Owning your own home is becoming not an option. Now, I'm not trying to fearmonger anybody, but this is where the money is going, so stick with me. If you really want to understand what's going on in any market, don't follow the headlines. That's what they want you to see. What you want to be looking for is follow where the money is going. So as of right now, billions of pounds are flowing into the UK housing market. So this isn't from everyday investors. This is from massive, large institutions. So you've got large financial institutions, you've got pension-backed companies, you've got insurance companies, and then you've got corporate landlords. Companies like LLoyds Banking Group and their residential arm company, Citra Living. They are building and owning large rental developments across the country. Then you've got Legal and General, also investing billions into the UK housing market. And you've got Aviva, also involved in residential property investment. Guys, these aren't small-time players. You've all heard of them. So they're playing the long-term capital positioning game, positioning themselves as like a core asset class. And the question you guys need to be asking is, why now? If you think about the world, how it is right now, inflation has been crazy. It's very high. Cash is very much depreciating. The stock market is going through wild cycles right now. Look at the price of gold the other week. Crazy. Crypto is just volatile. COVID destroyed a lot of businesses, especially the hospitality kind of business sector. But the one thing that's been pretty stable is people always need somewhere to live. So housing is one of the few assets that hold value over a long period of time. Produces monthly cash flow, is backed by actual demand, and it's a growing population. It's only going to become more demanding. And the councils can't keep up with the demand, so the supply is limited. So from a large corporate, like institution basis, the housing market is a solid investment. They're not buying property because they love bricks and mortar. They're doing it because it literally ticks every single box for long-term wealth preservation. Put yourself in their shoes. If your job is to protect and grow billions, if not trillions of pounds, that's your main job. Where are you going to park it? Property is the safest investment. Hard assets, land, developments. When you see and you hear about these large institutions buying up large amounts of property development, or even starting like side companies to just solely invest in that in a certain area, that's why. Because it's a solid investment. It's not random, it's full on strategic for long term. Now, here's the part of the video where people won't like what I have to say. It's becoming almost impossible for the average Joe on the average wage to eventually get on the housing market and own their own home. You will eventually have to become content with the thought of renting forever. The UK is slowly but surely shifting from a culture of home ownership to long-term renting. That's the new culture. You know, the World Economic Forum, you will own nothing and be happy. And this isn't happening overnight or over a few years. This is over decades. This is the shift. Massive institutions are happy to play the long game, happy to change the narrative over decades. When tax became the norm, that was a 50-year battle to pay tax. Traditionally, paying tax was just in the times of war, right? To fund the war. Now it's all normalized. Tax is the way of life now, but it was a 50-year battle. But let's get back to the housing market. Deposits are so much harder to save for now, and you've got stamp duty on top, so you kind of need double your savings to pay for the stamp duty. Mortgage criteria are getting tighter and tighter, so your wages to the price of houses, it's at like 7 or 8 to 1. 2008, the crash, that ratio was 6 to 1. We're above that now. That's how almost unattainable it is to get your own home, to own it. A lot of people going to uni. When I was in school, people that went to uni were the smartest of the whole school. It would be like a select handful would go to uni. Now everybody can just go to uni. Then you've got the student debt. That's also delaying your opportunity of buying your own home. Even if you're earning a good wage, that debt is holding it back. That's like a mortgage in itself. Has your wages gone up since? Probably not. Might have gone up 4% in the last year. Well done, you've kept up with inflation. You actually haven't got a pay rise. The factory that I used to work at, they went through strike action to get a pay rise, and in the end they settled for a 4% pay rise. It's not a pay rise. You stayed in line with inflation. You haven't gained anything. Yet they went through strike action. Mental. But I also get it, because you're scared to take that much action. You've got so much responsibility. You can't afford to go on strike. Like, you might have to take a week's cut of wages to go on strike. That's going to hit you massively. Everyone is, their expenses are up to here. So a week off, you feel it. 2 weeks off if you want to go on strike again. You feel it even more, to the point you can't actually afford to go on strike, so you settle. And that's where they've got you. You have no leverage. The working man literally has zero leverage whatsoever. Getting back to the housing market, you know, these large financial institutions with these thousands of homes, they've got leverage. They can spread risk across multiple portfolios. They can access cheaper finance, probably because they own the finance company, but I'm assuming that. But they can absorb these little blips in the chart. They don't see that. They look at the long-term growth. These little blips, they can absorb them. Absorb these little blips of financial hits. It means nothing to them. To the standard landlord that might own 2, maybe 3 buy-to-lets, that could put you out. So that's why they operate at scale, because they can absorb the risk, they can spread the risk. It's very little risk. That's why they do it. So all these smaller, you know, landlords with 2-3 properties, they are being squeezed to the point it's almost not worth it. There's a chart I saw yesterday, or it might have been this morning, all the days merged into one, but it was the amount of private landlords that put their properties into a limited company has skyrocketed. That's not by accident either. They've driven that. With the Section 24 changes, that is what has driven most landlords to put their portfolios, if they can class them as a portfolio, I don't know, 2-3 properties, into a limited company, so they're not affected by that. It's mad. They've driven that. They want everybody in a limited company. So listen guys, this doesn't mean that you will never own your own home, but it does mean that the bar is moving higher and higher constantly. And if you're not paying attention to that, you will just end up reacting to it and getting frustrated and angry, as opposed to what you could be doing is positioning yourself, knowing that that is the trend. Another piece of this puzzle is supply. Right? We're not building enough homes. Planning is so slow. Didn't they talk about making this process easier? If anything, it seems like it's got slower and harder. Developments are getting blocked. Not everywhere, but they're getting blocked. Construction is exceptionally slow. The price of materials skyrocketed to the point where the developers are even looking at it and thinking, there's no money in this. They're not charities. Skilled labor is short as well. You know, finding an amazing build team when you need them, very hard. So demand is rising, supply can't keep up, and then it doesn't solve, so it just keeps compounding. And that's how housing becomes more valuable over time. And guys, this isn't some secret plot. It's simple. It's solely because the system struggles to keep up with the amount of houses it needs to build for the amount of people that actually need them. And once you understand that supply and demand is as simple and as black and white as that, that is why big institutions are investing into the UK property market. They don't buy based on emotions. They don't look at houses and be like, yeah, it'd be nice to own a development plot over there. They buy solely based on the long-term supply and demand realities. Now, I didn't mean for this to be a whole doom and gloom video. This is a positioning video. So you can sit there and complain and moan about how the system is unfair, or you can learn about how the system works and position yourself within it. You don't need billions of pounds, you don't need millions of pounds. You're not here to compete with those institutions. The only thing you need to understand is the direction of travel. The people who get squeezed in a market shift are the ones who stay stuck in old strategies while the rest of the people adapt. So I'm not saying everyone needs to go and buy their own home tomorrow before the world ends. But what I'm saying is, if the biggest institutions in the world are piling money into the UK housing market, that is a signal worth paying attention to if property is something that you're interested in. And if you want to understand how people and myself are still making money out of property in this market, with everything around you, tougher conditions, stamp duty, higher prices, inflation, cost of living, everything, even with all of those conditions, you can still win. I promise you, you can still win. I put together a free training video that walks through the models, the structure, the numbers, everything you need to understand to get started in property, step by step. So this isn't any just get rich quick scheme. This is what I'm doing. This is what my students are doing. This is what you should be doing. This is how people are adapting to the property market right now. So this is step 1. Go watch this. Then at least you'll know and you'll understand how the market is shifting, as opposed to in 5 years' time just be frustrated and confused and annoyed at the whole system.